Hey everybody, and welcome to another session at the Virtual Vision Finance brought to you by Ultimate Fintech. I'm Rachel McIntosh. I'm a podcast host and journalist at Finance Magnates. And I have here with me a guest I'm very excited about, Paul Vanson Fleet, who's the head of Treasury Services FX sales in the APAC region at JP Morgan Chase and Company. Paul, welcome.
Thank you. Thank you very much for having me.
Yeah, absolutely. So I know who you are, but for people who may not know about you, can you talk a little bit about yourself and the work that you do?
Yeah, of course. So I'm based in Singapore. I head up our cross-currency solution sales for JP Morgan in the APAC region. Well, I'm originally Dutch, so I've been now in APAC for 10 years before in New York and in EMEA. But I like the weather better in Singapore. So from that perspective, happy to stay in Singapore currently. And what I do is really, I help our customers to manage their risk management in a more automated way from a foreign exchange standpoint, as well as also helping clients to solution structures between payments, receivables, and liquidity together with foreign exchange. So it's quite an interesting role we have in JP Morgan because we sit within Treasury Services, as well as very closely aligned with our FX markets and trading.
Yeah, absolutely. So can you talk a little bit, before we move forward, a little about this concept of risk management in an automated way? What kind of services do you offer there?
Yeah, so it really depends a little bit on the client. So I think it's simple thing is what we're trying to do with JP Morgan, and especially because we're so large in the FX market, is to do some outsourcing for our corporate customers or non-magnified names, the FX risk, where a lot of clients look at hedging, but with all the new e-commerce coming up to play, people are looking to pay in their own currency, to give more capability. For instance, like when you buy a ticket, people can now pay, for instance, in British pounds when they fly from Singapore to the UK, instead of previously it was always Singapore dollars. All these things come into play where you look at client experience, as well as on how do I manage then the risk. Because what happens really, the FX rate moves lightning speed, milliseconds, depending on the currency pair, but a consumer customer doesn't have any clue and they just want to see a rate or they want to see a price, which is the same for the entire day, and even book things in the weekends and overnight. I mean, the biggest item always comes into play. It's not when someone is booking a ticket during office hours, because everyone will be there, but it's over the holidays, the weekends. With, let's be honest, most consumers would buy stuff during the night, not during office hours.
Right.
So that's really where we manage, we take over the risk management for our customers so they don't have to take that risk. And depending a little bit on the underlying product, we offer a variety of guaranteed rates. So from 15 minutes up to 72 hours, and even include things like when, for instance, there's a refund, a chargeback, or cancellation, we give up to 365 days where we manage the risk and give the same rate back as what, for instance, your underlying consumer or customer has paid.
Okay, amazing. Yeah, so that kind of leads me to my next question, which is about the fact that margins are dropping for many cross-currency businesses, and therefore the need for robust and effective payment systems is growing more and more urgent by the day. So my question is, what can both banks and also fintech startups do better in the foreign exchange payment area to serve their customers?
It's very interesting. I think the thing is, it depends a little bit what kind of fintech you are and what kind of bank. I mean, you have to look at, like, we're a global bank, so we have presence everywhere. We have trading teams everywhere. So for us, it's much more easier, for instance, than you're like a single bank, single country, or just have trading teams, let's say, only working doing 6 to 8 and then a few night traders. And the fintech, same thing. Like if you look at some of the remittance companies coming up, one of the biggest issue is not about the most efficiency and technology, but all the regulations they have to adjust to and getting licenses across. So I think where the banks work in is very much like partnerships, which could be with a fintech. It could also be with other banks to really give that client experience, the best client experience, and also lower cost by being more efficient. The other thing, of course, we also have seen is a lot of clients starting, and especially the fintechs, doing what I call pre-funding. So I'll give you an example. When I make a payment, let's say from Singapore to the UK, while it looks real time, what really happens in the back end is that the funding is already put in, let's say in the UK, and you distribute in the UK, when your client says, yes, I would like to pay, but what really happens is the Sing dollar she perhaps have paid hasn't been converted yet and moved to the UK. So it's really a lag. But that means you need pre-funding, which means also you need quite deep pockets to keep those pre-funding, especially when those corridors grow, as well as also the more corridors you're going to have, because in every corridor you have to have pre-funding. So I think that's like a new concept coming in. The other thing I think what also comes in is just blockchain, because let's be honest, most of the banks, the core banking systems are from the 60s and the 70s. So
yes,
it's always quite great. And I think with that, it really gives you the ability to move information much faster, as well as liquidity. The issue, of course, also be it's not just the banks offering blockchain or working with blockchain or even the blockchain providers, but then it's the underlying infrastructure which is lacking, which comes into reporting. It comes in, let's be honest, FX markets for G10s are open 24/7. But if you go like, for instance, restricted markets, they close nicely at 5 p.m. and there's no liquidity anymore. So you can't do any conversion, even while you have it on blockchain. There's no one there to give you really the FX liquidity. So it's really working across, and sometimes really having a hybrid solution. For instance, you manage risk during the day and give it over to bigger partners during hours you can't manage it.
Right, I see. So yeah, I want to touch in a little bit more on this idea of blockchain in banking systems. You mentioned this infrastructure question. So we've seen banks sort of testing, building their own blockchain systems. We've seen solutions like Ripple coming into play and trying to be like the new Swift. What direction do you see that going in? Do you think that banks are more likely to kind of build their own things, or do you think that something like Ripple has a chance at becoming the new infrastructure for financial transactions like that?
It's an interesting question. So in my personal opinion, I'll maybe like a few years ago, when someone asked me like maybe 10 years ago about blockchain, I'll be saying nothing's going to change. Everything's going via Swift.
Yeah.
As you know, JP Morgan has JP Morgan Coin, which we have been investing.
Right.
I think at the end of the day, it's very much like Swift will be here. There, I think what I understand is also they're looking at blockchain. It's really the underlying infrastructure and the technology which needs to enhance, and just the speed. So I think at the end of the day, the one who will survive is the one who has the most partnerships, the most contributors, because it's all about access. So I would say it's like when someone comes in and like what we see, for instance, in the APAC region, everyone wants to start an e-wallet. The biggest issue is not starting an e-wallet. The biggest issue that a shop accepts your e-wallet and getting that access points across the globe, because let's be honest, someone has an e-wallet because they want to pay. And if you only have one store, nobody's going to use it. And it's the same thing, I think, from a blockchain and a payment perspective, is you have to have enough contributors to really make a dent and make the change happening. And then that's, I think, what you'll see is like the central banks are trying, really hard to initiate blockchain projects, etc., but get everyone involved. And as long as it's only one party doing it, it's not going to happen. It needs to be multiple parties across. So you have like what we call in Singapore, we have Project Ubin, which is MIS, where there's also blockchain projects in other countries like Canada. Everyone is looking at it, but again, it's really needs to come driven by the industry. And that's really also why Swift has been so successful, because all the banks own Swift, and it's a global standard which is happening. And then Ripple, of course, coming in with their own current cryptocurrency and their own blockchain. It really is how many parties can they get onto the chain, because that's really happens. It's like, how do I connect to you? And it's the same. That's why corresponding banking, 40 years, 30 years ago was developed, because I would like to pay you, but I don't have a direct connectivity with you. So it's really other information.
Right. So it's sort of like that, a race to just see how quickly, one sort of platform can get to all of these different banks. And then, I guess after a certain point, then the rest of the banks will have to sort of follow suit because everybody's using it.
Exactly. So I think that's really the point. And it's the same thing. It's not only banks. I think, looking at Europe, where it becomes open banking, it will be remittance companies. The more access point you have and the more utilization, it will just drive the industry at the end of the day.
Right. So that kind of leads me to my next question, which is about, the relationship that banks have with fintech startups and companies, perhaps like Ripple or whoever. Is there sort of a competition going on between these two sort of halves of the payments world, or is there more collaboration happening? And if there's not more collaboration happening, should there be more collaboration?
It's I would say it's a give and take. So
Okay.
and it all depends where they play in. So I think if you look at a bank, the bank offers more than just payments, and a
Mhm.
lot of things also comes into credit relationship, trust, other parts like regulations. And I did a seminar, I think around 6 years ago, at an MBA, and one of the things they ask is like, is Google and Apple going to take over banking? Because they were looking at that time. And I told them the only big thing is, where are you going to put your money with Apple at that time? Like maybe the new
Mm,
generation would, but my parents and even myself, I would be like, putting my money with Apple, I'm not sure if I'm ever going to get it back. So
right.
it's that trust factor which comes into like,
Mhm.
banks have been around for 200 years, or even that they're regulated. So I think that's one thing where you just purely get the remittances, and it's more convenient, and price will win at the end of the day. So what will happen is you have a lot of retail customers, small SMEs who'll be looking at, okay, maybe I'm going to do it with one of the fintechs because they're cheaper than my banking provider. But at the
Mhm.
same question, and it's always, the question always comes in is, what happens if the banks start offering the same kind of pricing as a fintech? Would you still be utilizing a fintech,
Right.
or
Yeah.
or you could just continue with your bank because it's the same convenience, because you have an account, and it's not only your account, you have your mortgage, you have your credit card, you have all these other services you have with the bank, which perhaps not given by a fintech. So I think that's always the give and take. I think at the moment we're still not at the tipping point. So it's still like, maybe 10% of the entire population for payments is using a fintech. And then, the cost to move everyone to a similar kind of model outweighs the benefit. So that's one
Mhm.
thing. At the same point, I think the fintechs collaboration helps banks to further expand their offering. So for
Mm.
instance, like JP Morgan in APAC, we don't have a retail bank. So we don't have branch presence. So we're looking at partners. How can I do the last mile delivery? Now, we could go to another bank, we could go to a fintech, we could go to both. So it's very much like, how do I give offerings to my clients, which gives me really end-to-end coverage? Perhaps I don't want to build myself. So I think
Mhm.
that's really where the collaboration comes in. So I think from the fintech and the banks, they will continue to collaborate, but at the same time also can compete. But
Yeah.
furthermore, the
Yes.
fintechs also need the banks for their own settlement, because at the end of the day, while they still need accounts with someone till they get a banking license and then become a bank, and it becomes more difficult because then they have to do all the regulatory reporting, have capital in place. So from that perspective, it's a very interesting playing field where like competition, as well as their clients, as well as they are vendors to the banks. So I would say it's
Yeah.
almost coming in, depending which point of view you're looking at.
It's so interesting, yeah, that there's so many layers to that relationship. And I also like that you made that point about this psychological factor when it comes to fintechs versus banks. Like, speaking as someone who grew up in America, there's, like maybe 5 or 10 big banks. And, when I got my first bank account when I was 16 years old, I just went with the bank that my parents used because that was what they had used. And, their parents had also used the same bank. So it's going to be interesting to see how fintechs can and challenger banks can win trust from these institutions that have literally been around from hundreds of years.
Yeah. And
Yeah.
it's similar. Like, you're from the US. I think we're trying to get checks away for the last 50 years in the
Yeah.
US, and still everyone, when they're 18, they would like to have a checkbook. And
Yeah. Yeah.
it's very interesting to see where human behavior just continues. What happens? Because let's be honest, if we go for a mortgage, what did our parents do? We went to the bank. So what do we now? We want a mortgage, we walk into the bank, because it's what we've been learning since our entire life. So it's, I think, that psychology effect, and what we know continues. And it depends per country. And also, when we look at certain group of people, where do they work in? What are they doing? For some of them, it's very common to go into a fintech, and they just
Mhm.
do not, they don't want to do business with a bank as much as possible. While others went like, yeah, but I have a bank account since I was like, my parents opened a bank account when I was 5, like,
Mhm.
you know, like a savings account. So I'm utilizing a bank account when I'm a student. And then when I become like start in the workforce, I'm still using the same bank account with the same
Yeah.
bank, and I'm never going to move. even while
Yeah.
perhaps the service is terrible. It's only really that point where you say, the mortgage maybe goes to another bank, and then you start moving other banking services.
Right, right, exactly. So then I want to ask also, given the relationship between these fintechs and banks, which is multi-layered and very complex, you know, what's really holding banks back from making innovations themselves? Is it the lack of collaboration with these platforms, or why haven't banks managed to catch up to the way that some fintech startups are operating?
I think it's a different model. So that's
Okay.
taken account, and the way banks have been working, and of course it's also a business model. So I think it's, if you look at like JP Morgan, we spend around $11 billion in technology every year. So there's a lot of
Hmm.
innovation going on, but it's a very
Yeah.
big organization.
Right. Right.
One of my colleague banks like DBS, they're known for the, I think, the best digital bank in the world. They do a
Mhm.
lot of innovation, but there's still other banks who's been saying, I've been working like this for 50 years. Like if you go to other markets, this is the way I do business, and I'll continue like that. And it's also what people are asking. Now,
Mhm.
at the end of the day, it comes into the majority. So when you start looking at business cases, if I want to change my entire business model, how many people really need it? How many people really need to have, when I send funds from, let's say, from the UK to Singapore, real time? It's a small percentage,
Yeah.
because it's most of the people who have like, or their kids studying in another country, or they have like business there. But even like, I'll give you an easy example from the States perspective. How many
Mm.
companies really do international business in the States?
Right. Exactly. Very few.
It's maybe very few, like, and like Canada, Canadian dollars is really more exotic, and we're not even talking about exotic currencies. So the question comes in very much like, what is my business model, and do I really need to be that international? And that's why I see, like, if you look at, I see the fintechs, a lot of them come from Europe. A lot
Mhm.
of them are coming from the APAC region, because it's so diverse, and
Yeah.
Europe because, the multi-currency. You look at the US, it's a very, what I've seen so far, it's like technology wise, a lot of big technology firms. But from a fintech perspective, if you look pure at the numbers, it's lesser numbers than, for instance, in the UK. If you look at the unicorns coming in on the fintech side, not on like the Ubers and the Facebook, etc. I think the US has
Right.
been far, far ahead of anyone else. But I think that's really also, you can see what is really the need for people to do so. And it's one of the things what we've seen, for instance, in Singapore. People love to travel before, of course, the lockdown and COVID,
Mhm.
and people were known for multi currencies. And what happened is, when I moved here 10 years ago, and I was like, okay, where can I convert funds? Because when I was in Europe, I used my bank card. I get quite good rates from my retail bank. And I just go
Mhm.
to, if I go to Thailand, I go to the ATM, pull out Thai baht, and I'm fine. Here,
Yeah.
people still go to what we call Change Alley, which is like the money changers, which is one row of
Ah,
money
yeah.
changers
Mhm.
to get real cash out, because that's the way they have been doing it. So, and then they compare rates and say, oh, but this one is better rates today than the other one, and just hard cash. And they'll bring in cash still to Thailand, because it's culture wise or anything else. Now the question is people not going to the bank anyway to get like better rates or anything? But then what you'll see here is also multi-currency prepaid cards are coming up much more than, for instance, if you go to the States. Because in the States, I mean, most people just think about US dollars, no other currency.
Right, right, exactly. And it's so interesting also, this idea that, like, in where I live now in Finland, like nobody uses cash. But if we were to go, as you said, to Singapore or Japan or Portugal, like cash is everything and everywhere. So it's just, there's the psychological factor of what's happening plays such an important role here.
Yeah, and it's
Yeah.
it's interesting to see, because I'm Dutch, so if I go back to the Netherlands, everyone uses the local debit card system.
Hmm.
Well, I look in Singapore, everyone uses credit cards, but I can't use my credit cards in the Netherlands half the time, because people don't accept credit cards, because it's just too expensive. So you need cash or
Yeah.
you need a debit card, otherwise you can't pay. So it's a little bit, these kind of things come into play, where I think every country is a little bit different culture wise,
Mhm.
how they've grown up, and also where they are in the evolution.
Yeah. So how does somebody, an entity, a massive entity like JP Morgan, handle those kind of cultural differences from country to country? Is that something that you take into account when you're building, forex payment systems?
Yeah, so I think the thing is there's a certain, I would say the 80% standard and then
Mhm.
20% customization for a country. And then
Mm.
of course it comes into partnerships. Like, let's be honest, if you go to China and you offer banking services, and especially let's say in the retail sector, so you need to be able to offer Alipay and WeChat Pay, etc.
Mhm.
collections because they don't even accept card. I mean, last time I went there, and as a foreigner, I can't have an Alipay or WeChat Pay account. So I went to
Yeah.
one of our customers and I wanted to pay for coffee for my colleagues. And the only thing I had is cash. And when I give cash to the cashier, he looked like me very dirty. How dare I give him a dirty bill? Don't you have? And he came back and said, sorry, we don't accept cash. And I'm like, credit
Oh
card,
my
debit card.
God. Yeah.
I'm like, no. So I got my colleagues to pay for my coffee, which is good in my taking account. Like, we're still like going Dutch from my heritage perspective, but it's very much the difference coming in. So it's again, where are we? What really happens? And I think that's where also partnerships comes into play because we can't build everything. So in certain markets, where we maybe want to there, do we really want to invest in it, or are we just going to go with a partner, which could be a fintech, it could be an existing e-wallet, it could be other banks to offer those kind of services.
Okay, yeah, so interesting. So I want to talk a little bit about what's next in sort of the Forex payment arena. We've covered a lot of different areas of, where innovation is going to and what's causing innovation, what kind of factors need to be taken into account in order to innovate. What can we expect as customers, the next features and services that banks are going to offer in terms of Forex payments?
A good question. I think it all depends who you are and what you do. I
Mhm.
think one of the things is, I would say, it's really globally from one account paying someone else domestically, as if
Mm.
you would have an account domestically, and expanding that more rapidly without making use of pre-funding. So very much connecting the local clearing system, we call it, with the international clearing system, or using
Mm.
a bank's presence or nostros to offer those kind of services.
Okay.
So I think that's already ongoing and it's going to go expanded and people will be able to make more cheaper payments into accounts, but also into like e-wallets and other things. I think the
Mhm.
other thing will come in is very much like the other way around. So the collection side. So payment side, I always say it's much easier. It's the collection side that becomes more difficult. Like for an example, if you're
Mhm.
like want to sell to someone in Indonesia, and let's say
Mhm.
you're a smaller SME or you have like even like a marketplace, you want people to pay in Indonesian rupiah. You
Yeah.
don't want them to pay in US dollars because it's going to be expensive. Now,
Mm.
the problem is you could perhaps offer them a rate in Indonesian rupiah or even say, okay, this is how much I'm going to charge you in Indonesian rupiah. The problem is getting it out. And now setting up
Mhm.
an account in every restricted market is going to be difficult. So I think where it comes in is very utilizing like, you know, infrastructures to get virtual accounts where your customers could pay in as if they would make a local transfer, but you get the funds, for instance, back into Finland in euros or any other currency, for
Mhm.
instance, besides needing to have 500 accounts across the globe. So I think that's one side.
Right.
The other side is very much, offerings of guaranteed rates, but more risk management products. So a lot of banks are offering guaranteed rates with like on an, I would say, 2-day basis, and what we call a
Mhm.
settlement on T+2, so on a spot basis. But really connecting more dots to each other. We're very much, we're looking at forward curves, we're looking at offering swaps. And the third thing is very much automation. Because what happens now a lot
Mm.
is like what we've seen more and more is like when certain customers are looking at more sophisticated products, they do the same trick all over. The only thing what happens is it's manual intervention. So someone calls up one of our traders, say, okay, I would like to buy, sell, let's say US dollars against Sing dollars, but I know it's always happening on a Monday. So what happens is I will call the bank every day on Monday, and I think it's much more also outsourcing the activities in a more automated way. So I think one of the things which will come up in the next coming few years is much more, you give parameters to your banking partner or even the fintechs, and they will just execute on your behalf based on those parameters. So it's like, plug and play kind of items coming in with, of course, the local nuances, because I think that's always the most difficult one is to match the
Mhm.
local nuances in every country.
Yeah.
So I think that's really what I see for the future. Besides, of course, I definitely believe like blockchain will further streamline the processes, funds will move quicker. But also, there will be an adaptation that has to happen in the banking system, that everything becomes 24/7 or even 24/5, and not like all our bankers go home at 5 p.m., but it continues to move accordingly, which is already changing, but it's a very domestic basis, with SEPA and with, faster payments coming in and fast payments in other countries, or real-time transactions. It's happening now on a domestic level, but really the next step, it's going to be on a cross-border level.
Okay, very exciting. Paul, I want to thank you so much for your time. It's been so interesting to talk to you. Before we go, do you have any announcements that you'd like to share? And can you also tell our listeners where they can find out more about you and about the work that you do?
Yeah, of course. I don't have any announcement. I think we wish everyone, hopefully, a quick end of the COVID era, I would call, and hopefully next year it's going to be much better than 2020.
Yes.
All the information you can find, of course, is on our JP Morgan website. So you can just Google JP Morgan and it will come into our main website. And there's more information about all the services we offer. And of course, you can always reach out to our bankers and salespeople in country if you have any relationship there. So that's really, I think, from my side. Thank you very much for the time. But that's really it from mine.
Absolutely. Okay, take care.
Thank you very much. Have a great day.
You too.